Hello everyone, and welcome to some unprecedented or unfamiliar economic times where we've had an interest rate rise for the first time in 11 years, and we have economic data that doesn't really line up very nicely with saying whether the goals have been achieved or not. So we're going to go through each of the domestic macroeconomic goals one by one and kind of discuss whether they are or are not being achieved. So strap yourselves in, it's going to be a fun ride. We're going to look at some data, we're going to look at the definitions, and then we're going to compare them, which is everyone's dream on a Friday. Unless it's not a Friday when you're watching this, which it probably isn't. So, the goal of low inflation. The goal of low inflation states that the general level of prices are rising at a rate of 2 to 3% on average over time. What that means, on average over time, kind of refers to a period of kind of 3 to 5 years, or just realistically recently. So if we look at the data we've got for the last 12 quarters, or the last 3 years, you can see we had a period over here where inflation was kind of below or just at the bottom end of the goal. We had well below the goal, and then the last 12 months we've had well above the goal. What's kind of amazing is with the on average over time, if you just look at this, you'd probably say that we're trending above the goal. Technically, I did the math on this, and on average over the 3 years, inflation rate equals about 2.09%, which is actually the lower end of the target range. So technically you'd argue then that on average it's being achieved. Now if inflation continues to be high for the rest of this year, so if in the July quarter and the September quarter it's still around that between 4 and 5%, we're probably going to blow out and be beyond that goal. But now technically, as far as numbers are concerned, the general level of prices have been rising on average within that target range. So technically you could argue the goal has been achieved based on that. Now where things start getting a little bit more complicated. The goal is strong and sustainable economic growth. So that states that we should have the highest growth rate possible without causing any unnecessary inflationary, external, or environmental pressures. A rate of 3 to 3.5% real GDP growth per annum. So if we look at our annual growth rate here, how we calculate how much we're growing is how much production has increased compared to the previous year. And so at the moment, we're kind of working with some inflated figures. So the figures that we had are like 9.6% economic growth last year. And why it was so high was we were responding to this negative growth. So compared to shrinking, we had grown a significant proportion. And so as we move throughout this year, the numbers are probably going to start to ease back and reflect a normal kind of economic situation in Australia. So technically, just in terms of the data, 4.2% is above the goal range. And so as far as the 3 to 3.5% is concerned, we're above that goal range, and we might be thinking maybe the economy is starting to overheat. And that kind of ties in line with, if we look at that 5.1% inflation rate we currently have, that could be considered unnecessary inflationary pressure or unacceptable inflationary pressure, because that's increasing the cost of living, and that's going to slow aggregate demand down. So there's an argument to be made there that both with the data and the inflation rate, maybe the goal of strong and stable economic growth is not currently being achieved. However, some of the things that are happening in the economy, like the increase in interest rates, should slow growth down to trend back towards the goal range. And also just the economy bouncing back and having no need to compare to when we had deflation or shrinkage in growth is going to kind of get us back towards that target range. So technically probably not being achieved. And finally, the goal for full employment is to maintain the lowest rate of unemployment possible without causing unnecessary inflationary pressures, where only around 4.5% of natural unemployment exists. That's known as the non-inflationary accelerating rate of unemployment. So if you look at the current unemployment rate we have, and even over the last 2 years, it's 4%, which is realistically 4% is around 4.5%. So just from a pure numerical perspective, that's good. You can say that's been achieved. However, once again, we have that inflationary pressures point. And when you take that into account, when you think about that inflationary pressure side of things, maybe the goal of full employment is not fully being achieved, especially when we think about the other issues that come up with full employment, in that to be employed is only working 1 or more hours per week. And then also under that, we have the issue that there's been a massive increase in hidden unemployment, where people would work if they were offered a job, but just aren't looking for work at all. So you could really argue currently that with the inflationary pressures and the flaws in the unemployment rate, maybe that goal is not being achieved, but from a purely numerical perspective, that around 4.5% is happening. So there you go, a very murky set of domestic goals at the moment. So what I think is going to be important as a student is how you justify whether the goal is or is not being achieved using data. And that's going to be the most important part. So saying why it is or is not achieved, because you could argue either way in a lot of these situations, because those inflationary pressures are really borderline. If they continue to go as the way they're going, the goals won't be being achieved. Because they're only just starting to ramp up, you could really argue that we are around the goals in a lot of these circumstances. And that's it. So if you have any questions about these, feel free to comment below on that. Feel free to check out this in blog form on my website. I'll put the link in the description below. Other than that, I hope you're having a wonderful Friday, and I'll see you next time. Goodbye.